So this is starting to become very annoying. It's not fun anymore. I used to love the stock market. With all these crazy fluctuations for no reason, for exaggerated reason, just makes you hate the stock market. I mean, down 500 points one day, up 400 points the other day, down 400 points the next day. This is a market for day traders. They are enjoying it right now. They're having fun right now. So I don't know if it's a crash or a correction. It is starting to look a little bit like a crash. I mean, even bank stocks are dropping hard. Who knows? Regardless, I'm still buying. So I bought some Facebook shares today at 145. I know it's not a dividend paying stock, but I just had to buy it. I bought it initially at 168. Right now it seems like a little bit too high. So I felt like I needed to buy some more. So when it dropped to 145, it felt really, really attractive. Even though it doesn't pay dividends, but it's got good capital gain potential. And earnings for Facebook is coming out next week. So it should move next week. There should be some movement next week. We'll see what happens. Maybe I'll be able to get out. Although when I bought Facebook initially, I wanted to sell it at 200. We'll see what happens. Amazon, ridiculous today. Amazon earnings. So just because they missed revenue by 1%, they made 56 billion instead of 57 billion or something like that, something ridiculous like that. So they missed it by 1%. Stock drops 10%. Like, that's the response. You miss revenue by 1%, we'll make sure you drop 10%. It does not make sense. And we're talking 56 billion revenue. I think profit was about 2.8 billion, which is actually a record high. They've never made this much profit. So it doesn't make sense. It's such an exaggeration. It's so obvious that it's an exaggeration for the stock to drop 10% just because they missed revenue by 1%, but they still made crazy profit. And if you look at the estimates, the past 3 quarters were relatively close to each other. But then this quarter, the estimate is way far. So the initial estimate was already exaggerated, was already high. So for sure, they weren't going to meet it. And they almost met it. They missed it by 1%. It's like it was meant to happen. Whoever comes up with the estimates, they wanted Amazon to miss the estimate. It wasn't a gradual growth. So regardless, I don't care. This is just a buying opportunity. Amazon at 1600 is perfect. I think last time it was at 1600 was 6 months ago. Yahoo gives it a 2100, I think, or 2300 12-month target price. It dropped 10% today, and the last time it dropped this hard was back in 2014. So these are really crazy numbers. Definitely giving us a chance to buy in for those who didn't buy Amazon already. And another reason it dropped by 10% is, well, according to analysts, is because their Q4 predictions, instead of being 73 billion, they're predicting 72 billion in revenue for Q4. So because they've lowered their future earnings, their projected earnings or projected revenue, then the stock gets a 10% hit. And by what? Instead of projecting 73 billion, they're projecting 72 billion. So for me, all this is exaggeration. If that's really the reason why the stock dropped, then this is all exaggeration and just creates a buying opportunity. Personally, I bought Facebook today. I would love to buy Amazon, but obviously the problem is cash flow. Don't have enough money to buy everything I want to buy. But definitely Amazon is something I want to buy. Google, definitely want to buy Google under 1,000 for sure. It's getting close to that number. Looks like I missed out on Intel. Went up 3% today, hitting 45. Really want to buy it at 42. I know I'm a little picky on price, but I don't know how to buy something knowing that it was cheaper the day before. So knowing that it reached 42, now it's at 45, even though I think it's gonna surpass 50, I don't know how to buy it at 45. I'll just accept and move on, find something else. I like to feel like I bought something at the lowest price I possibly can. It might not be the lowest price, but at least I tried my best to buy it at the lowest price, giving myself the best chance to make a decent capital gain. But right now it's at 45. If I could buy at 45, but then it could drop again, so then I'll be very disappointed. So I'll watch it, I'll move, but I'll look at something else instead. But definitely a good stock to buy for long term, like 5 years plus. I'm just not that patient. So a subscriber brought up this interesting stock, Pizza Royalty Income Fund. It's at a 52-week low, trading around 8.5. Not only is it at a 52-week low, I think it's at a 5-year low. It's never been. Last time it was trading at 850 was back in October 2010. So it's actually at an 8-year low, not just a 52-week low, but an 8-year low. Dividends right now, dividend yield Dividend yield is around 10%. If it continues to pay the 7 cents per share that it's been paying since 2008, it pays 7 cents per share every month. So if it continues to pay those 7 cents per share at the price right now at $8.50, that's a 10% yield. So it's a great dividend stock. It's a great dividend stock for the 10%, but also good potential for capital gain because it was trading at like 17 a year ago. So revenue and income is slowly growing. Nothing major, not a crazy growth rate. So I don't understand why the stock is dropping. Balance sheet also looks very good. Much more assets than debt. So a lot of equity, shareholders' equity. The only thing is that the retained earnings keeps decreasing. It's going into the negative actually, and just keeps increasing into the negative. So that probably means that they're paying out too much profit as dividends. So probably that's why the stock is dropping. I don't know. I'm not sure. And I don't know if the dividend payout will remain. If that's the reason why the retained earnings keeps going into the negative, then they're probably going to have to decrease the dividends. But it's been in the negative for a very long time, so probably not going to do anything to the dividends. But yeah, I'm not sure why the stock is dropping, but it definitely looks interesting. I think it's worth the risk with a 10% yield and an 8-year low at $8.50. It's worth buying. Once again, just too many stock opportunities. What do you buy? And they've been paying these dividends since 2008. So another stock, another restaurant chain that pays pretty good dividends and that is at a 52-week low is Boston Pizza. It's trading around 16.8 right now. Pays about 9% dividends. Pays about 8% dividends, and is also very consistent in the dividend payouts. Another restaurant stock is the Keg Steakhouse. This is also trading at a 52-week low of 17 about. It's also at a 5-year low, so it's never been this low. Last time it was at this price was 5 years ago. It pays about 7% dividends. I believe also monthly distribution. I remember I actually looked at this stock back in 2009 when it was trading at $10. I was thinking of buying it, but back then I didn't care about dividends, so I wasn't that interested. If I had bought it at 10 back then, I'm pretty sure would have sold it before 20, because it reached 20 and even surpassed it. So I don't know when I would have sold it, but it would have been very interesting to buy it at 10. Would have been very interesting to buy it at 10 back in 2009, collect the dividends, the monthly distributions, and then you sell it at a capital, sell it at $20 and make a 100% capital gain. So yeah, so many stock opportunities right now, so many buying opportunities, everything's dropping, lots of 52-week lows. It's just a matter of, do you believe it's a crash? Do you believe it's a correction? So in my opinion, I'm not sure. I was thinking it was a correction, but it's starting to act like a crash. But regardless, I'm going to prepare for both scenarios. If it's a correction, well, I want to make sure I participate. If it's a crash, I want to make sure I have enough money to buy more in case it crashes. But regardless, I'm not selling. Regardless, in any scenario, I'm not selling anything I own, because I'm confident that what I own is not going to go bankrupt. It's just going to drop and then eventually come back up, and hopefully I'll be collecting dividends while it's fluctuating. Although I don't have all the best dividend stocks, but right now it's definitely a strategy is to focus on dividend stocks so that I don't have to worry much when constant fluctuations, because I'm starting to get old and I can't handle this stress. All right, if you have any questions, any comments, any stock tips, leave them in the comments below. Like always, if you're going to open an account with Questrade, use my referral code in the description below the video so you can get between $25 and $250. Thanks for watching.